Hey, it's Soleil, and this is episode 198 of the Orange Pill Investor. I am in between vacations. Had a few days in Nashville with my son before school starts, and then tomorrow flying back out to Indianapolis for a few days. Gonna hang out uh, with my parents and some old high school friends, and doing a little bit of fantasy football drafting in person that I have not been able to do for years. But it's Wednesday, so can that be roll day? It certainly can in certain instances. Or it could just be a management day, could be a maintenance day. So let's take a look at some positions that I set up last week. My whole thing is selling premium short for the week and then reinvesting those profits either in long calls or more shares, and then taking those shares and selling more calls, covered calls. And last week I sold 21. Where are they? Yeah, here we go. 21 at the money covered calls and collected 500 bucks a pop. That was like 10 grand or whatever, which wasn't quite enough to get another 100 shares. And so I thought, okay, I'll just sell a put. That obligates 12. I sold the 128, so that obligates 12,800 of collateral in a cash account. Now, of course, this is a margin account, so it really only obligated about half of that. And I got paid 500 bucks. So that is about 4%, 4% return on that, on a cash account collateral. 128 times 4% would be about 4,800. So I got over 4%. Now in 2.5 trading days, actually it's almost 4 p.m. So the third trading day is almost over. That means there's only 2 trading days left. If I was accumulating 20% of this over 5 trading days, then that would be 100 bucks a day, 105 a day. So I can already book the majority of this. This is like 4.5 days worth of returns that I can collect in 3 days. So it makes complete sense to just close this position now. And I will get all of my collateral back. This is saying 6,400, but in a cash account, it'll be double that. Fuck. Okay, so my I thought I fixed this for actually that's why I had it turned down. So if you're on YouTube, I kind of screwed you. One guy complained that I had my desktop sounds up too loud, and they had to crank up the volume because my voice was low. And then when I got the fill sound, it made them go deaf. So that guy's fucked. If he had his volume cranked up to 100 and then just heard that loud ass fill sound, because I had my desktop up to 100 as well. So sorry about your eardrums, and maybe I'll put a little warning in there. All right, so you can see that I got my buying power back. And the other thing that we will see here is that these at the money covered calls are going to be upside down. So I got paid 500 bucks a piece, but as of right now, if I were to close these, it's going to cost me way more to close them or to roll them than I got paid for them. So you can book this as a loss on paper. And so what I may do is just use that 6 grand as the buying power I need in order to roll that. And of course, once I roll these to next week, I will, maybe I'll get it 500 bucks, or maybe I'll get a little bit more since the price will be higher next week. So this doesn't really bother me. And what kind of is slightly annoying is that this is just grinding its way up. What I would really like is for a nice sharp move up and just let these get completely obliterated. And then I'm just going to have a shitload. It's going to cost me a whole bunch of money to roll here. Now that may sound counterintuitive, but since I have these protected with long calls, I've got 24 of these 84-day long calls here. So if the price rockets, I can just sell a bunch of these and pay for the roll. Also have 13 of the 485-day. These would be considered leaps since they're over a year old. I can always peel off some of these to pay for a very sharp up move like that as well. So for me, that's best case scenario. And the fact that I'm using margin in the first place, over the next year, I have to peel away some of this margin. When MicroStrategy is setting record highs, I don't need to be exposing myself to margin risk at this point. Right now, I consider MicroStrategy a bargain, even at, it was a bargain at 130, it's a bargain at 140. Between now and next year, I'm considering anything under what, $500, $600, $700 a share. Anything under that is probably a bargain. So I've got high hopes for this, but some people get stressed out when they see the stock moving above their strikes. This is best case scenario. I want my value to go up. And even if I had 2,000 shares a couple of weeks ago, I bought another 100 shares. If I have to let 100 shares get called away at this price in order to pay for these rolls, that is perfectly fine. That's kind of how this is supposed to work. If the name of the game is buy low, sell high, then I am letting these covered call strikes determine what selling high is. So anytime I'm selling a covered call and the price goes above that and I let my shares get called away there, that means I'm selling high. It's kind of easy mode. It's almost kind of like buy low, sell high for dummies. That's what I think about covered calls. If you set a covered call strike that is above your cost basis, then you get them called away, you're guaranteed to make a profitable trade there. Now some people are, I consider myself a long-term investor, but some people are, long-term buy and hold. They just want to set it and forget it, and that's completely fine. But at some point, especially if you own options, they do have an expiration date, so you have to shit or get off the pot at some point. And up until expiration date, you do, when you buy a call, you always have that option to just exercise it. But at some point, you will reach the finish line and you have to make a decision. So I let these weekly expiration dates decide for me whether it's a buy low opportunity or a sell high opportunity. So this will be fine if this week I don't necessarily add to my position and I let some of these positions roll off. And I would like to keep this 2,000 shares. That's the 200 shares, pre-split that I've been kind of clinging on to. I used to have about 300 shares pre-split, and some got called away at like 1,700 a share. So that actually worked out pretty well, as a matter of fact. So until MicroStrategy is over 170, that will actually be just fine. But as we approach 170, I will be accumulating more long positions. Just take a quick peek at these vertical spreads that I set. So this vertical spread, this is a working order to try to get out of this contract, or to close it, I should say. I set this up pre-split, so that's why I have 10 of them. Same thing for this one. But this one is only 9 trading days away. Unless MicroStrategy makes a sharp, fairly decent move by next week, this is a loser. So I'll lose about $1,000 on these spreads, unless the price can get up over 150. Same with these. These are currently winners, and I've had these on for about 2 weeks. And I am trying to purchase them back for 15 cents times 100 each. And I generally try to collect about double. So I must have sold these for 30, and I want to buy them back for 15, and I'll just pocket the difference. Tesla is making some nice moves, and I'm tempted to just peel off some of these shares. I kind of like having these long calls just here, 2 years. I can just let these chill at easy mode. But the premium on Tesla is really not that great. I do like Tesla's long-term prospects, and I'm keeping it here as a little bit of a balance. The Tasty Trade algorithm does not like me did not like me having like 95% allocation to MicroStrategy back in the day. So I went ahead and added some more Tesla. I probably had a couple hundred shares of Tesla back then, but I've added some more shares of Tesla to try to make the algorithm happy. And I do believe in Tesla long term, so it doesn't bother me that the shares are here. But I'm so bullish on MicroStrategy, especially over the next 12 months, that I kind of am just begrudging every dollar that I'm being forced not to put into MSTR. Kind of pisses me off a little bit. So, in order to get a little bit more buying power, a little bit more breathing room, just in case MSTR does something nasty, I am considering about maybe letting another 100 shares of these peel off. I don't really like having this buying power with this account size, probably under 70 or 80. So this is annoying me a little bit. But if sell in May and go away is a real thing, then maybe it shouldn't surprise me. I think a lot of MSTR people, once they caught wind of it, they're like, oh, this is going to go to 500 a share, 1,000 a share, whatever, post split, and just want it to happen like today or tomorrow. And same thing with Bitcoin. I think Bitcoiners are like, when is this going to 100,000? We've been promised 100,000. The maxis have been clamoring for 100K for 4 or 5 years. And, I think people are getting antsy. But, the market does what it wants to do and on its own time. However, if I am anticipating that this bull market and the 4-year cycle will continue, then I'm thinking that will continue through, most of 2025. And so the timer is ticking. Like Bitcoin, you can kind of just feel the coil tightening on Bitcoin and MicroStrategy. So over the next month or so, I may get a little bit less aggressive with generating premium here. I'm almost kind of talking myself out of that, actually. I may not. I may stay just as aggressive and I'm going to do a full video about it because I don't really have time right now. But I don't really care about my shares. I know I said I want to hold on to these 200 shares, but I'm only want to hold on to them in order to generate premium to buy more long calls, because to me, this is where the money is. This is the leverage. This is what's going to generate enormous profits. if the cycle continues. So, not financial advice, but that's what I'm betting on. So, and this is coming, it almost, it almost rubs me the wrong way of even hanging my hat on long calls because I'm an option seller. So, I'm coming at this from an option seller's perspective. I just want to reduce my cost basis and increase my chances of success. But being so, I guess, confident in Bitcoin, and then that confidence basically rubs off onto MicroStrategy because they're executing this monopoly on Bitcoin accumulation so perfectly that that's one reason why it just makes me a little bit annoyed that I don't have every single dollar I can possibly scrape into it. But it does make for a nice little pairs trade sometimes. If MicroStrategy's up and Tesla's down, I can take the profits from one and put it into the other. And same way with with Tesla being up a little bit, maybe I will take that opportunity to peel off a few shares of Tesla and make that available for MicroStrategy. But TLDR version on that is the shares, since they're not leveraged. Well, this is a margin account, so technically they are, but they're not leveraged to the extent that these long calls are. So I'm more than willing to sacrifice shares for more long calls. And my reasoning is that in the event of a sharp move, when this goes to 170 or 200, these long calls will appreciate much faster than shares will. So I really won't mind that the shares get called away. If they had to be called away. But what I really foresee happening is that I'll be able to peel off some of these long calls to prevent these shares from being called away. All right, that was way longer than I expected to make this today. But really, I knew that MicroStrategy was up and I was going to be able to close this. Yeah, this put. I was going to be able to close this put, get my buying power back, and collect what 80-90% of what I sold it for in half the time. So that's basically the deciding factor. And I won't be managing any of these covered calls, even though they are in the money, you know. So I'm managing that put that I sold because based on the amount of collateral, I can't collect much premium. However, these 129 covered calls are, let's say, $11 in the money. And the mid price is going to be what? 12.25? Yeah, 12.75. So there's 170 so the amount of extrinsic value, which is what I can collect via theta decay over the next 2 days, is subtracting the current price, subtracting the strike price from the current price. So that's $11.70. And then the value of this is about $12.75. So there's about $100 of extrinsic value remaining in this contract. So if I just hold on to this for the next 2 days, I should be able to collect that $100. $100 over 2 days is not amazing. As I said before, the $500 is about collecting about $100 a day. But the put that I sold only had $40 left. So the covered calls have about 2.5 times the amount of extrinsic value left in these contracts. So I am not in a rush to roll these. I will just wait until tomorrow or Friday and see what the price is. The price of MicroStrategy could be back to 129 by then, or it could be 150. And I'll probably be looking at selling off some of these long calls to pay to prevent them from getting called away. All right. That's it for now. Be good, y'all.